And now to drill down on the data for inflation for June, definitely that number came in 22.79% for June, higher than what we had in May, but definitely consensus was it was going to come out much higher. But at this time, I believe this is still in line with the FDC's forecast there. We saw that information released yesterday by the NBS, and it is definitely higher at this point, and definitely we've seen why that has happened, and definitely prices are rising. If you go into the shops, definitely feels more expensive. Well, to help me unpack that, we have Bolanle Agbaji now, Senior Analyst, Financial Derivatives Company, joining me right here in the studio. Great to have you,
Hi, thanks
Bolanle. So yeah, we've been holding our breath for a while now, waiting for that June inflation data. Seen some, comments about it. Some say, it should be higher, but it's 22.79. That's what we're getting. Close to your forecast, though,
Well,
FDC.
to address that, obviously, it was in line with our forecast. But what we attribute that to is the fact that there was obviously consumer price resistance for some time, and that was obviously the most of the month of June. And also there was inventory buildup by manufacturers.
Right.
And right now, when you're having, inventory loosen up and, them trying to rebuild the inventory, then you start to feel the impact of the price in the market. So obviously that will be reflective in the inflation numbers for July. And also, this kind of situation is not a situation where, this price subsidy removal happens and you mainly see increases in price almost immediately. You still give it a bit of some time before.
But we saw the prices go up immediately.
Yes, obviously you saw the prices go up. But when you talk about manufacturers, for example, they don't just increase their price as they see subsidy price removals happen at that time. They do take some time before they feed that into their cost and their final price.
What about the transport industry? Because definitely that translated immediately.
Yes, it did. But also the NBS did come out to explain that, the figures are reflective of, 2 weeks at the end of May and 2 weeks at the beginning of June. So it's not fully reflective of the whole month of June. And I guess that's also a reasonable explanation for the figures that we had seen, the 22.79%. But all in all, it's in line with our forecast. And obviously, inflation is still going up at the moment, and like we all expected. And it will take some time before,
because we see the NBS explaining right there that the June consumer price index numbers may not fully capture the impact of the fuel subsidy removal and the unification of the
and that's just because they're only taking into account 2 weeks at the beginning of June. So we do expect that the July inflation numbers will definitely be more reflective of what's happening in the society. The fact that cost of living has increased significantly and still continues to rise, although the World Bank definitely believes that before the end of the year we should see disinflation happening, and that's just reflective of the month on month. So it's a situation where inflation keeps rising, but the pace would start to decline at some point, and that's obviously different from deflation.
Right, but this is definitely still more pressure, on the average consumer at the end of the day, even though some expected about 30%. But this is still high.
Well, we do expect that, actually the price of the pump price of petrol to keep going up, and that's just because now import duty is reflective of what the actual exchange rates that we're seeing in the market, or the market reflective rate, and obviously that marketers will definitely price that in, and so we do expect that pump price of fuel would actually increase in the coming month, and it's quite sad, but I guess it's the brunt what we're expected to bear at this point, and then in the medium term, like the World Bank mentioned, we do expect, and obviously when Dangote refinery comes into full force, we expect that the prices would ease out, and hopefully we can actually get back to where we were before.
Right, and consumers need to breathe.
Yes.
At this point. All right, let's look at the food inflation there. About 25%.
Yes.
That's really high.
Yes, that's really high. And, in the month of June, we had seen, shortage of tomatoes as well, and some other, commodities that are reflective in the food basket. And that was obviously because of, the infestation that happened that affected supply. And obviously, there was
tomatoes, too. What's that? that disease called again? Forgotten that name.
Yeah,
Lotus something something.
Yes, yes.
Yeah,
so
that's still impacting.
Yes, that's definitely what happened, and obviously that happens because you're not seeing the actual amount of investment that it's necessary for that particular sector, and to prevent such diseases, to increase supply, and also shortage storage as well, to increase situation where you can actually store tomato for situations like this that do happen, that is beyond the control of some farmers.
All right, let's look at the states now. We see Lagos now.
Yes.
The most expensive state. Yeah, we see the inflation there, 25.75%. Ondo follows with 25.40%, and Kogi. And looking at Lagos, why is Lagos so expensive?
Well, Lagos
is it time to move out of Lagos? Is that what this is telling us?
Maybe. It seems like it's getting a bit congested, but at the same time, Lagos is more or less the business hub, and whatever impacts or whatever happens with food prices will be felt the most here. And obviously we do produce a significant amount in Lagos, but most of the production happens outside of Lagos, and obviously when you consider the transportation cost into Lagos, that has to be factored into the prices, and I guess that's why you have that situation here. And also it seems like Lagos has more consumers that are willing to pay that price. It seems like many manufacturers would experiment with Lagos consumers first, because you know, there's significant business activity here, and you know, it seems like consumers are willing to would be willing to pay that price for the higher prices that we're seeing in the market.
And talking about food inflation, we're still, all eyes still on that Black Sea grain deal,
yes.
And right now we've seen Russia
is not, yes,
pulled out on that, and we're still, you know, countries are still battling with inflation right now.
Well, and it's going to get worse, especially with the price of bread. There's speculation that the price of bread would increase to about 1,150 naira per loaf, and that's just because from the wheat angle they do although prices right now are still stable and relatively lower, but we do expect that the price of wheat would, you know, slowly climb in the next few weeks, and that's just because Russia has mentioned the fact that some of their requests haven't been met, so they're not trying to sign that deal. But we do hope that, you know, something is done with whatever they're asking for, and they're able to push forward and more or less sign the deal and get back to status quo. But definitely the price of wheat would be affected, and corn, and some other grains that are involved in.
I think we might see some kind of last-minute agreement from Russia.
We do hope that there will be last-minute agreement, and they're just, you know, trying to pull and show who's the boss right here. But
yeah, playing hard to get at this point.
Exactly.
All right, let's look at oil prices now. We see oil prices are down on the falling U.S. dollar, but this morning they've gone up. Yes, we've seen a rebound this morning.
Yes, despite
same old volatility we've
seen
in that market.
Exactly. And obviously it's interesting that it's gone up now, despite the fact that you're seeing low growth from China, and also the fact that there's increased production in Libya as well. But I guess the output cuts would hopefully start to penetrate and be felt more in the prices of oil. And obviously, as we for us in Nigeria that were benefiters of, you know, this oil price, we do expect that oil prices continue to inch up. And obviously, coming to the story of cocoa as well, right. The price of cocoa is currently at about $3,350 per ton, and also is expected to keep going up, just because Ivory Coast has mentioned that they're trying to reduce their exports at the moment, just because they had their harvest for this particular year, so 2022 to 2023, had declined from about 2.22 million metric tons to about 2.14 million metric tons. So we expect that the prices of cocoa would increase, and obviously we benefit from that as well.
All right, let's look at the Naira. Now, back in the news again, we hit a new low, new all-time low at the parallel markets. This was expected, you know, really, and it's a double whammy at this point. You have currency devaluation, you have rising inflation at this time.
It's not nice to feel at the moment, but I think one thing we kind of have to look at the positives when it comes to some of these things. I guess
it would be great to see the positives.
Yeah, so the positive of this is that there's convergence happening.
Right.
The fact that obviously it's converging at a rate that is higher than what, you know, most people expected or what most people would prefer. But all in all, it's still converging, and hopefully at the point where there's full convergence, we start to see exchange rates, inch up a bit. And obviously, you're seeing, new developments, especially with bilateral trade development between Nigeria and the UK. When, that is solidified and that happens, we're able to boost our exports via that, and hopefully not our imports.
All right.
Boost our exports from that, and obviously that would be translated into better rates of exchange for us.
Yeah, we need more exports.
Yeah, and the fact that they're ready to accept Naira directly for, this particular trade. Although the brunt of it will be felt with the government or the CBN, but all in all, within the individuals in Nigeria, they're able to, carry out business as usual, and there could be economic growth and, hot money coming into the country, and that would obviously increase supply of dollars. And obviously that's the path that is supposed to take, and we do expect that that particular path happens sooner than later.
And hopefully some cold money.
Yes.
And
I forgot to mention, obviously, the IATA rate too has more or less dropped, and obviously that plays into the increasing fares or travel fares, air travel fares for many individuals. Not nice, but it's still convergence.
Still convergence. Yes. So we'll take convergence as the positive.
Yes, like we always needed for a long time coming.
Yeah. All right, let's look at what the MPC is going to do next. The meeting's coming up next week. They're having to deal with rising inflation, currency devaluation, and rising food prices, cost of living, and all of that. What are they going to do? Are they going to raise rates?
It's between raising rates and keeping the status quo. But when you have a situation, it goes back to the books. When you have a situation where there's rising inflation, to tackle that inflation, you have to keep increasing interest rates. Like the US, for example, increased rates for about 3 years before they started to see, or 2.5 years before they started to see, that drop in inflation. So we more or less have to keep that consistency going, so that and the fact that, there are other policies to support this rising interest rate, we expect that it will be felt more in the economy and can pass through the banks the right way. And obviously, it's not what...
We saw they reduced the CRR for merchant banks. So is that an indication of what's to come?
Yeah, so it's like the increasing interest rates, but they're also, lending out on the other hand. So it's trying to increase, lending to the real sector, or boost lending to the real sector.
Liquidity.
Which will boost liquidity.
And boost inflation.
Yes, but all in all, it's expected to be felt through the manufacturing sector. So in all, more or less, you're trying to increase productivity within the economy. So we hope that that's channeled towards productivity, and that can obviously be beneficial in the long run, as opposed to, feeding more, liquidity in the system.
What we're seeing in the domestic commodities market right
Obviously, prices remain high, and stubbornly high. In the nearest future, we don't expect that, no right seller at the moment would drop prices, obviously, because of the high cost environment. So that's just what we're seeing.
Imagine battling stubborn inflation. You need stubborn policies to battle stubborn inflation.
It's not nice, but it's the reality of where Nigeria is. And obviously, one has to remember, Nigeria is not the only one in a particular situation. A lot of African economies are battling, similar issues. You have hikes in rates, or CBNs across Africa trying to increase rates or keep rates as high as they can, because the world economy is going through it at the moment. So we always have to remember Nigeria is not alone.
Yeah. We're not insulated at this point. Thank you so much, Bolanle Agbaje, Senior Analyst, Financial Derivatives Company.
Thank you for having me.
All right, so after the break, take a look at the real estate sector contribution to Nigeria's GDP in the first half of 2023. That's our next conversation. Do stay with us.